The clock is ticking down now for an SEC approval of a spot Bitcoin ETF in the U.S. in the coming days. The crypto world's going to find out whether 14 different money managers and ETF issuers will be allowed to launch their own spot Bitcoin exchange-traded funds. Here with what this will mean for crypto traders and what we can expect, Dave Natick is still with us, VettaFi financial futurist. This has really been the big topic in the ETF world for the past 6 months. I don't know, but it's obviously heated up. January 10th is the deadline we're looking at because that's when the SEC has to give some sort of answer to one issuer in particular, ARK and 21 shares. But the anticipation is we'll get an answer on all of them.
Yeah,
so
absolutely.
what is the next week, 2 weeks, month going to look like on this?
I suspect the next thing we'll see is that both the exchanges that are going to have to trade these products and the issuers will finish up their paperwork. There's a couple different forms that have to get filed. That's when we'll get a bunch of information like, what are the expense ratios going to be? We still don't know that. These things could come out free. They could come out at 2%. We have no idea. I think everybody's thinking around 50 basis points is probably the over-under on that, but we have no idea. So we'll get that when we see that from the issuers. Then we'll get the approval for these things to trade, and the SEC may or may not give a hard date there to say everybody can start trading, say, on January 21st. They may simply say, all right, everybody go, in which case we might see some of these things start trading next week. We might see a bit of a horse race to see who has their capital markets desk lined up first, and some folks may be ready at 9:30 on one trading day, and other folks may not be able to trade until noon, just because there are a lot of operational considerations in getting any ETF off the ground.
And if and when, Dave, so the SEC greenlights, this new product, what would you expect demand to look like? And where do you think, Dave, maybe the demand comes from? Do you think this is retail, it's RIAs, it's institutions?
I think initially this is pure froth, right? That's the issue. Because it is the story we've all been talking about, because Bitcoin has already had a heck of a run in the last few months, I don't think that this is going to be one of those things where we immediately have $10 billion in new assets show up. Remember, one of the funds here is Grayscale's GBTC converting. It already has $25 billion in it. So we know what that demand looks like. To me, the real question is when we look back, say, in a couple of weeks, maybe a month or two, how much incremental demand has there been over that $25 billion? Because that'll get redistributed a little bit. Grayscale won't hang on to all of that. It'll move to a BlackRock product or a VanEck product or somewhere in there. So when we add all that back up, is there a lot of demand? I think there's some. Most of the new demand will probably come from what I would consider more portfolio allocators, not traders, not folks who are just trying to take a run on Bitcoin. Those folks already know how to do that. They have lots of ways to do that. But if you're a financial advisor and you're running a model portfolio, putting a 3% slug in your aggressive version of the model, that's where I think the initial assets are going to come from.
And those financial advisors, you talk to those people
all the time.
A lot.
Yeah.
How are they making the decision of which one? Is it going to be purely, as you know, a lot of the ETF flows right now are fee-based. Is that what it's going to be? Is it that the cheapest one is going to win? The
cheapest one's certainly going to have a bit of a leg. We already know that Invesco and Galaxy are going to waive the fee for the first 6 months. That's always a little bit of a gimmick. I don't think most advisors get sucked into those kinds of fee waivers. If one of the big players, the big known names, say like a BlackRock or a Fidelity or somebody, comes out with the cheapest one, I think that's tough to compete against. But interestingly, I think it's where the volume is in the first couple of weeks that matters more than the cost.
So in that case, it does matter who starts trading first.
It can, because if we get a big slug of volume and then the derivatives market shows up and all of a sudden we have a live options market on that particular ticker, that's very hard to ever upset. So we've seen this before with things like gold. GLD finally started trading options. You could come out with the cheapest, best gold product in the world. You'll never pry GLD out of that derivatives ecosystem.
Do we know that there is going to be an options market automatically? Like if the SEC approves it, do they approve it all? Is there then options?
So then,
then
it would go to the actual options dealers to decide effectively when they want to do this. Now, when GLD got options, there was a bit of a hiccup there about how it was going to be cleared, et cetera. I have a feeling those conversations have long since happened already. Everybody understands that the options market on this is going to be enormously valuable and enormously powerful. I mean, you guys have talked about it a ton of times. People trading zero-date expiration options is almost replacing people trading stocks in some cases. I think you're going to see something very similar happen here with Bitcoin. I suspect we'll have a good, clean options chain with real volume on it within weeks on the outside, and possibly within days if somebody's done a lot of pre-planning.
Wow. Cool.
Dave, thank you so much for being on the show today. That was great insight. Appreciate it.
Thanks for having me.